Welcome to FreightWaves Now, Wednesday edition style, tip of the cyclical freight cycle. Happy July 3rd, day before, hopefully a big celebration for you. I'm Chad Prevost, and we have got some interesting cooks in the kitchen for what is happening right now.
Hi, I'm Anthony Smith, market expert and economist here at FreightWaves, and today we're looking at the ISM New Orders Index. The ISM New Orders Index is a survey-based index that is based on the level of 50. Anything below 50 is considered contraction, while anything above 50 is considered growth and expansion. In the purple line, we're looking at the month-to-month movement, and as of the most recent result, we have a level of 50, so it's just at that threshold. And of course, in the yellow line, we have what I love to look at, the overall trend, the 6-month moving average. New orders is something to really take note of because this is a precursor to overall manufacturing production. And manufacturing has been a headline item as of late with a lot of trade talks and G20 summit that just wrapped up not too long ago. Manufacturing has been slowing a lot as of late, and the tariffs have really started to take a toll to amplify it. The slowdown hasn't come straight from the tariffs, but it's something that really exacerbates the overall trend. There are spillover effects when we're looking at tariffs. When we look at tariffs, there are things like businesses that slow down hiring. They begin to be uncertain as to where things are going, and so maybe they stop production or where they're going to relocate. So this is something that's going to really be of note when we look for the second half of 2019. Now, it's uncertain as to what's going to happen from these talks, and now that trade talks have resumed with China. But one thing's for sure, we'll be sure to keep you up to date here at FreightWaves Now.
Hi, this is Seth Home. Today I'm going to be talking about the Dow Jones Transportation Average. The Dow Jones Transportation Average is a stock index composed of 20 broadly diversified transportation stocks. It's composed of airlines, trucking companies, railroads, and so on. It's also America's oldest stock index, dating all the way back to 1884. Investors like to pay attention to the transports for two reasons. For the last 150 years, they've been one of the best leading indicators and clues for where the U.S. economy is headed. So go the transports, so go the economy. Now, secondly, there's a technical analysis concept called Dow theory. And what Dow theory suggests is that the overall stock market and the transports should move together. They should move up together and they should move down together. So if the economy is booming, the overall stock market should be up and so should the transports. Now, when they diverge, the transports are going to be your leading indicator, suggesting either warning signs or positive signs. So let's take a look at what's going on with the transports today. So I have a chart for you today, and it's two indexes. It's the Dow Jones Industrial Average in orange and the transports in blue. And as you can see here on the left-hand scale for the Dow Jones Industrial Average, it's hitting an all-time high, right around 27,000 on the left side of the index. Now, the transports, on the other hand, are sitting at 10,500 on the right-hand side of the chart here, about 10% below their high. So now these two have diverged. As you can see, when this happens, what this is telling you, the transports are suggesting that the economy overall is not as strong as the overall stock market is suggesting. So there you have it. That's the Dow Jones Transportation Average, why it can be a meaningful economic indicator and help you make more money in the markets.
Afternoon, everyone. It's Robbie Crawl here. I was going to give you a little bit of an update for the carriers out there for reefer tender rejections. What I have pulled up here is our map of the United States broken out into our markets. And as you can see, the colors on the map, we have white to dark blue, white being 0 tender rejections, and all the way to dark blue, which is 55 to 69%. And in the central part of the U.S. right now, you have from Quincy, Illinois, down to Little Rock, Arkansas, into Fayetteville. All of these markets have reefer tender rejections that are all over 50%. So what does that mean for the carriers? If you can get a load in or around these markets, you're definitely going to be able to leverage that and make the most on the load going out. Going down to our southeast, we have Tipton, Georgia, Savannah, Columbia, South Carolina. These are also markets that have reefer tender rejections all over 30%. So again, if you can get a load in or around these areas, you're definitely going to be able to get a premium coming out. And I want to leave you on one note, especially trying to keep everything cold just like it should be. Make sure and keep your doors shut on your trailers until someone starts working on you, regardless of what anyone at the shipper or receiver says. You don't want to claim or anything like that, so let's keep those temperatures down. Y'all all have a safe and enjoyable 4th, and make sure and hit the subscribe button down below.
Thanks for tuning in to FreightWaves Now. We bring it to you each and every business day. We're going to take a break tomorrow for the July 4th holiday, but we will see you very soon. Thanks for spreading the love on social media, and you know where to find us at 4 p.m. Eastern Time each and every business day. See you later, alligator.